Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. So I know at least what the dinner table conversation was around my house over Thanksgiving, and probably most houses, and that was housing affordability and this housing crisis, Greenbelt, lots of the other issues, interest rates that have been top of news, other than obviously what was going on in Israel. And so I want to check in with Marc Desormeaux, who is the principal economist of Canadian economics at Desjardins. In his role, he analyzes economic trends and public policy across Canada to help Desjardins members and clients around the world to tackle the most pressing economic questions, and housing is clearly one of them. He, by the way, grew up in Clarkson, Lorne Park area, Mississauga, and so therefore my Saga 960 listeners, he knows some of the challenges in our area. Today, we're going to be chatting about how the housing affordability crisis is impacting Canada's economy and what it means for our future prosperity. Marc, welcome to the show, sir.
Good to be with you, Brian.
So I read a couple articles and then went online to get your publication about the problem and the solutions of housing and housing affordability. And bottom line, it sounds like you think it's primarily the lack of supply. Is that correct?
That's one factor that's contributed to the severely stretched affordability that Canadians are facing these days. There's a supply shortage that has accrued over multiple decades. In fact, the Canada Mortgage and Housing Corporation estimates that we'll need to build 3.5 million more homes than will be built already just to be able to get back to normal affordability levels by 2030. So that's really a big thing that's contributed to the challenges that we're facing right now. But there are other things like low interest rates following the global financial crisis that encourage people to get into the housing market with those low borrowing rates. Pandemic preferences drove people to buy homes and to push prices up to where we are now. And then the other thing I'd highlight is just that Canadians like owning homes. If we compare home ownership rates in Canada to those of many other comparator countries, Canada's has one of the highest rates. So there's a lot of demand, but supply really hasn't kept up over time. And that's something that needs to change if we're going to deal with affordability over time.
You talk about the low interest rates and that they led to bidding up of prices, but that should have actually spurred developers to build more. So, yes, that demand was there, and the demand and the low cost of funds was there, such that demand went up. But that shouldn't cause a lack of supply. That demand should have been answered by developers coming in, and arguably, given that there was high price, that should have created even more incentive for developers to come in. So it really is a supply problem, isn't it?
Interest rates are kind of one input that go into how much home building we have. Certainly they impact the borrowing costs that builders can get when they decide to take on a new project, and so they're important in that respect. But you also have to look at the zoning regulations that exist in different areas where builders would like to build. There are things like material costs, labor shortages. The construction industry has been dealing with those for some time now. They've only gotten worse during the pandemic, and that's another factor holding back supply, and has been holding back supply over time. But we would normally expect to see housing starts pick up when interest rates fall, and they certainly were strong over that period where we had very low interest rates, but it still wasn't enough to keep up with that underlying fundamental demand that's created by very strong population growth in Canada, as well as those preferences for home ownership, and a number of those other factors that contribute to demand.
Now, one of your recommendations was to get rid of exclusionary zoning. What does that mean?
Ultimately, it is about creating regulations that allow the kind of housing to be built that reflects the needs of the population. So we've seen situations, for instance, in a lot of cities, not just in Toronto, all over Canada, where there is a preference for certain types of homes, lower density homes, when there might be demand for units that allow more people to live there in a smaller space. So single family homes, zoning that favors that can preclude other types of building that might be able to serve the needs of the population more, particularly if we get higher density housing. So that's one recommendation that we've made alongside many other commentators on the housing market. It's one thing that can help to increase the supply. We should also look at things like tax incentives, credential recognition for immigrants and foreign workers who have skilled trades experience, who can contribute to building more homes. And then there's also more ambitious kinds of ideas like repurposing commercial buildings for residential use. That's something that will take a lot of work up front, but it can also contribute significantly to increasing the housing supply and ultimately improving affordability.
Okay, so let's peel the onion back, as they say, on a couple of these issues. So on exclusionary zoning, you're saying that people should be able to do things with their houses from without having to worry about change zoning. So there was a proposal by the Ontario Affordability Task Force back a year ago that said that people should have an as of right ability to change a single family home in an urban part of Toronto from being a single family home into being a duplex or a triplex. In fact, they were saying that they could be I've never heard the term before, but a quadplex. So, turn one unit into 4 units. And they would have the right to do that without having to go and ask for a zoning change to allow that. Do you think that kind of change makes sense?
Well, I think at a high level, regulations that allow for higher density construction, for higher density homes, when that meets the needs of the population in whatever area you're building in, that can help to increase the housing supply and it can help to improve affordability. It's one measure among many that are out there that can be used to improve affordability over time.
So I guess that sounds like a yes. Another proposal is these major transit zones, which is within 800 meters of a major transit station, a TTC or an LRT or a GO train, that zoning would be automatically dramatically improved. Some people are talking about potentially 40, 50 stories around major transit stations. And some people are talking about even no height restrictions around major transit stations and allowing the market to decide what the right height is. Does that make sense?
Certainly, access to transit should be part of zoning. It should be part of how we think about building, particularly in a place like Toronto and the surrounding area where many people live farther outside of the city center. So it should be part of the plan for sure. Not having read into those specific regulations, I wouldn't necessarily want to comment on the nuances at this point, but access to transit, proximity to transit should be part of urban development plans and plans to increase the housing supply.
We have a couple of slides that we're going to walk through that are going to really delve into this issue in greater detail after we take a break for some messages. So everyone, we're going to be back on the housing crisis in just 2 minutes with our very intelligent economist from Desjardins. Stay with us, everyone. Back in 2.
Desormeaux, yeah.
Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Marc Desormeaux. He is the principal economist of Canadian economics at Desjardins. We're chatting about the housing crisis and housing affordability today. Marc, let's just go through this sort of step by step, if we could. How do high housing prices impact the economy? We understand how they impact people, but how they impact the economy?
They impact the economy in a lot of ways, and they impact a country like Canada where there is a large contribution from housing, perhaps even more than in other countries. Housing is an industry that has a lot of what we call spillover impacts. It's linked to many other sectors like construction, like financial services, like some of the services industries that are linked to rental and those kinds of things. So what it means is that when there is a robust, active housing sector, it can lead to activity in some of those other sectors and contribute more broadly to the economy. The other thing that housing prices do is that they build wealth for individuals, for households. And so that's something that can contribute to consumer spending to consumer confidence over time and ultimately drive economic growth. Those are kind of the positive impacts. What we're increasingly seeing these days with affordability so stretched is some of the negative impacts, which is that more and more income is going towards housing related costs, towards servicing debt, for instance, as opposed to consumer spending or investment activity that can drive productivity gains. We're also seeing parts of Canada lose their competitive advantage to other parts of the world because there is such a high cost of living, and highly productive people choose to move to other parts of the world where they'll have a
Calgary
little
is
bit more
advertising
disposable income.
on the Toronto subway all the time, saying, "Come to Alberta for the cheap housing."
Calgary, Alberta more broadly have certainly benefited from their affordability advantage since the pandemic. We've done a lot of work on this at Desjardins. If we look at migration from province to province, so looking at the number of people who go from Ontario to Alberta, less the number of people who move from Alberta to Ontario, it was actually at a record outflow as of the last quarter. So more people left Ontario for Alberta than we'd seen at any point in the past when we have data. It's very much being driven by housing affordability, and it means that Ontario is losing a lot of the members of its younger generation who over time can be expected to contribute to starting new businesses, bringing new ideas to the workforce, and ultimately driving the economy forward.
You know, we talked in the first segment about some of the impacts of this unaffordability crisis. You mentioned low interest rates. You mentioned lack of supply. We talked about government regulation, etc. What about immigration? Immigration last year we had supposedly 400,000 people came in, but with pent up prior years, it was actually 1 million people that entered the country, and we're supposed to have 400,000 every year going forward. How does immigration play into all this? Because a lot of them have got to be coming to Toronto and major cities.
Immigration is something that can contribute to both the demand side and the supply side of the market. Demand side means that ultimately more people within the country, there's more demand for housing, there's more what we call household formation, and ultimately a need for more homes. And part of what we are seeing in this affordability crisis we're dealing with is that demand is just outstripping supply around the country. But immigration can also play an important role in building houses over the longer run. We know that there are acute labor shortages within the construction sector, and that's holding back the extent to which we can build to meet demand. We also know that Canada's immigration system is very much targeted towards bringing in newcomers who can fill needs within the labor market. And we're seeing integration of Canadian newcomers into the labor market improve over time. So employment rates are increasing significantly. So in a country like Canada, very strong population growth contributes to housing demand, but we also need immigration and other temporary workers over time to help fill labor shortages and ultimately build the homes that we need to get back to an affordable place.
You know, I heard this CMHC quote that you had mentioned, 3.5 million homes. That's across Canada. They actually said 1.8 million homes. And it's not in the next 10 years. It's in, as you pointed out, by 2030. So it's in the next 7 years or next 6.5, frankly, in Southern Ontario. And it is incremental to what would be otherwise built to regain affordability. That's a heck of a lot of homes. Do you think we've got any chance of achieving that? And what do you think is going to happen to affordability in the next couple of years?
I would say that it will be challenging to increase home building significantly over time. And that's part of why we need all levels of government to come together and to alter regulations to do what they can to make sure that more homes are built. We were talking earlier about some of the economic conditions that people are dealing with now. In addition to higher interest rates, which increase borrowing costs, we've got labor shortages. There are very high material costs. These are all factors that are increasingly weighing on builders' ability to build. And we're dealing with this environment of economic slowdown. And normally when we go through a recession, there is a slowdown in building activity. So all of those are things that will make it challenging, certainly over the next year or two, for home building to keep up with that underlying demand. So that's something to be watching for going forward. In terms of affordability, we've done a few different analyses on this topic. Generally speaking, we do think that affordability will improve. There will be house prices will not rise at the rate that we've been seeing over the last 5 years. So that'll provide some respite from what we've seen in the last little while. But interest rates are high, which means borrowing costs are high. And we're not expecting that overall affordability in Canada will return to what we saw before the pandemic, at least not within the next couple of years.
I really worry that we are one of the first generations in history that is going to pass on a situation to our kids that's worse than the situation that we had. I heard this quote that it takes 27 years to save a down payment for the typical young person to get into the market. How is this housing crisis and the pricing of homes impacted our youth?
Certainly, it's a situation that many young Canadians are aware of, the fact that housing is just so unaffordable, particularly in large cities. And it's something they think about. It's something that impacts their mental health. But when we look at the economic impacts, it's pretty clear. And I think the most obvious thing that we're seeing is that it's impacting where people are choosing to live. Very hard to buy a home now. We're seeing a lot of Ontarians move to Alberta. I mentioned that 42,000 was the net outflow from Ontario to Alberta in the last year for which we have data, and that's the most we've ever seen in the period for which we have data. And the other thing that I'd highlight that we've been looking at, we do a lot of work on youth at Desjardins, is that the migration of people from out of Ontario this time is more concentrated among young Ontarians than it has been in the past. There are ups and downs in terms of interprovincial flows, but what's unique about what we've been seeing in the last couple of years is how many of the people leaving are under 35, which clearly reflects the fact that affordability is so stretched in Ontario, and many young people are choosing to live elsewhere in Canada.
Other than the fact that it's going to be farther for me to meet my grandchildren, is that a bad thing?
It's certainly not good news for the Ontario economy. Young people, particularly this young generation, according to the research we've done, are more entrepreneurial than young generations have been in the past. There's a lot of financial literacy. There's really there are a lot of skills here that are needed in a modern economy, particularly in a place like Canada, which struggles with productivity issues. So for Ontario, if we're losing our young people, it means that we're losing a chance to tap into that economic dynamism over time and benefit from it and generate stronger growth and a stronger quality of life here in this province. So it is a challenge for Ontario. Certainly it's something that has benefited a place like Alberta to have such strong population growth, and it's contributing to their economy over there. We do want to create a situation. We do want to have an economy where there is the possibility for mobility and for people to seek out good opportunities where they may come. But for the province of Ontario to be losing so many young people, in part because of the affordability challenges, that's something that will create challenges for the economy over the longer run.
Some people think a recession would actually be helpful to this housing crisis. What do you think? Is the potential impact of a recession a positive or a negative?
Well, we've actually done some work on this at Desjardins. We ran a series of scenarios in a piece about a month ago, looking at what might happen to Toronto house prices under various recessionary scenarios. One of the scenarios that we looked at was something close to the recession that occurred in the 1990s, the early 1990s, which hit Ontario very hard. What we found was that prices would fall by between 25 and 30% between now and the end of 2025. So that would reduce home prices, but it would come with enormous economic costs, billions of dollars in lost income, hundreds of thousands of jobs lost within the province under a recession like that. And even so, the affordability measure, whether it measured as home prices relative to disposable income, would only get us back to about where we were at the end of 2015, which was already a time of very stretched affordability. So all that to say, if a severe recession were to occur, we would expect that to impact house prices, to make house prices much weaker than they are now. But it would also result in job losses. And given where we are with respect to affordability, it wouldn't get us back to a place of the housing market being very affordable within just a couple of years. So all that, in our view, just reinforces how important it is for all levels of government to come together, to stop blaming each other, to work collaboratively, to make sure that more supply is built, because ultimately Canada's status as a welcoming and prosperous place depends on affordable housing.
We're chatting tonight about the housing affordability crisis. We've got an economist from Desjardins with us. We're going to take a break and come back in 2 minutes. We're going to talk about what government can actually do about this and what we can do to encourage government to do the right thing. Stay with us, everybody. We'll be back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Marc Desormeaux. He is an economist at Desjardins. He is in charge of doing Canadian economic studies. He analyzes economic trends and public policy across Canada to help Desjardins tackle challenges that we've got in our world. He actually grew up in Mississauga, so he knows something about some of the suburban challenges. As well as now he lives downtown and works downtown. So he's got some of the urban challenges as well. And we've been chatting about housing affordability and some reports that Desjardins has come out with recently. I want to now talk, if we could, Marc, about what we can do about all this. What do you think government should be doing? You've made some recommendations in your reports. Tell us about what some of those recommendations are that you think government should be implementing.
The first thing that I would say with respect to government policy is that it's important to understand that addressing affordability is a long-run process. There's no silver bullet that is going to magically make housing affordable across Canada within a year. This is something that's going to take years of effort, years of collaboration, and lots of smart policy. Our team has put out a series of recommendations recently about how to increase the housing supply, and we looked at measures that have been implemented around the world, some that have been successful, some that haven't. It really is about finding a way to boost the housing supply to make sure that building can, over time, keep up with demand. So there are a few different measures that we suggested. There are things like scrapping exclusionary zoning at the municipal level that can be implemented. What that means is making sure that the building code allows for building that meets the needs of a growing population. That could mean higher density housing units. It can mean building closer to transit. There are a few different areas within that kind of recommendation. There are tax incentives. We saw the federal government ease tax rates, the goods and service taxes on new rental construction in an effort to try and boost home building within the rental space. That was something that we were encouraged by. We can ease credentials, allow for better credential recognition for newcomers to Canada who have the skills that can help us build more homes. That's something that is relatively easy to do, but it'll take time for us to see the full boost to supply. And then on the more ambitious end, we talked about this earlier, one thing that could be done is to repurpose empty commercial buildings for residential use, make use of these office towers that may not be a full capacity, find a way to boost the housing supply that way. That'll take more effort, but it's something that can have a major difference over time in terms of boosting the housing supply. But ultimately, it is about making sure that more can get built. And all levels of government need to collaborate on this. They need to stop blaming each other for the problem. This is something that's going to take collective effort from everybody. And that's going to be important if the Canadian economy is going to be welcoming, is going to be prosperous, and ultimately the quality of life is going to be affordable.
So this, exclusionary zoning that you talked about, do you think if we actually allowed people to subdivide their homes and or to turn their home into a quadruplex, would people actually do it?
But I haven't looked at that specific measure in the context of Toronto or some of the cities around here. But generally speaking, measures that help to boost density, that allow denser housing units that meet the needs of a growing population, that's something that can help to boost the supply. It should be one measure among the many, some of which I mentioned earlier.
Okay. So commercial buildings, converting commercial buildings into residential buildings, typically in most of the office towers I've been in, you've got a central washroom, maybe one central washroom for men and another central washroom for females. And often all of the plumbing goes up and down the central core, and everything else is office space around. And the office space floor plate is substantially larger than a residential condominium or a rental house floor plate. Can they actually be converted, do you think, into residential buildings?
Certainly, it is a challenging prospect. There would be a lot of things like what you mentioned, the layout, the logistics, converting, all of this will take effort. It'll take time. But this is something that can increase the housing supply significantly over time. It may be challenging, but it's something that can help. And it should be pursued. It should be explored across all levels of government.
The Trudeau government took GST off of construction construction supplies for rental accommodation. Do you think that was a good move?
It was a good move, and it was something that we've actually been advocating for some time, just within Desjardins Economics, one of many organizations doing the same. The basic idea is that it helps to reduce the costs associated with new rental construction. And many builders are dealing with a lot of those costs these days, given that interest rates are high, material costs are high, and there are acute labor shortages in the construction sector. So it's one thing that can help to reduce costs and ultimately to stimulate new rental construction, which is needed across Canada. It'll just take time for new supply to come online and for that to translate into more affordable housing costs.
CMHC and StatsCan released a report a little while ago that compared how many houses we're building today, what the housing starts are today versus what it was in 1970, and the answer is that we're building about the same, which means that that we're building like half of what we should, or maybe even less than that, on a per capita basis. We should have dramatically increased our housing, and that single-family homes were about the same, should have gone up, but we're about the same. Condos went up dramatically, but rental housing was decimated. And, I hear this every day where, people in my office are trying to rent an apartment and they're overbidding. Like whoever heard of overbidding for a rental, property, but the rental vacancy rate is like next to nothing. What can we do? What should we be doing to increase rental housing?
Well, one of the measures I mentioned was the GST reduction. So that's something that can help to stimulate rental construction over time. Certainly rental housing should be part of the affordable housing solution. It's not all about ownership. There should be rental options as well. But I think the statistics you mentioned really speak to the fundamental problem here, which is that housing supply has not kept up with demand over time. It has not kept up with population. That's why we need to be thinking about the regulations that exist and how we can realign them to allow for building that is more in line with the needs of such a rapidly growing population, particularly in these days when inflation is high, when interest rates are high, and when population growth is at multi-decade highs.
What about rent controls? I once heard this quote that said, you cannot find an economist anywhere that thinks that rent controls are a good idea. And then that someone else said, but you can't find a politician that thinks rent controls are a bad idea.
The traditional argument against rent controls is that they discourage new building within the rental space. There are some studies that have suggested that that has been the case in some places. There are others that say the effect is more muted. But I think really it's all about making sure that that more construction happens, that we do have building that aligns with what we need as a growing population. That needs to be in the rental space as well as within home ownership. And there are many measures that can be implemented to try to encourage that, from the tax rebates, from the zoning restrictions being eased, to things like repurposing commercial buildings in a way that allows for more residential stock.
Stats Canada and CMHC in that same report came out and said that government regulation, red tape, was a big problem. The time to get approvals was the worst in Canada of almost the whole G7, and the Toronto and Vancouver, from a municipality standpoint, were the worst cities in all of Canada. Have you studied at all government regulation and the red tape?
Well, overall, government regulation needs to make sure that we can build more. We've seen in the statistics that home building is not keeping up with population growth. And so we need to look at a range of different measures, be they tax incentives or other ways to reduce costs and encourage new building. All of that is part of what we need to get back to affordability over time.
So I heard this economist tell me that one of the biggest problems in rental housing was in the 1970s, the elimination of accelerated depreciation of rental purpose-built rental buildings. What's accelerated depreciation, and how would that impact development?
Well, accelerated depreciation generally is a mechanism that allows for reduced taxation on certain kinds of investment. Now, I haven't looked at the specific policy measures that changed within the 70s that you're citing, but certainly, those kinds of measures are implemented broadly to try and stimulate new investment. And we need to look at measures that can help to boost the housing supply. That's ultimately what addressing this problem is fundamentally about.
So the idea of whether it's through tax reductions or tax incentives or putting back in place accelerated depreciation, you think some tax benefits might actually help development occur?
Well, I think there are a lot of different measures that policymakers can look at to try and encourage new home building. I mean, we outlined a number of them in a series of recent studies we've put out. The tax measures are part of them, particular part of that effort to try and boost new housing construction, particularly in an environment like what we're dealing with now, where interest rates are high, where inflation is still high and driving up material costs, and many builders who are thinking about starting new projects are concerned about the cost of doing so. So measures that can help to reduce those costs, to increase construction over time, that can be part of a plan to increase home building and ultimately improve affordability.
Let's broaden the conversation just for a minute. Do you think we're headed for a recession? What's your assessment of the Ontario and Canadian economy? What do you think we're up for?
Well, we are forecasting a mild recession in Canada over the next few quarters. We think it'll begin towards the end of this year and go into 2024 a little bit as well. Fundamentally, it's about interest rates rising as rapidly as they have. We know that there's a lag between when interest rate decisions are made and when we feel the full effect. We think that over time, higher borrowing costs will increasingly weigh down the economy, particularly in an economy like Canada, where there's so much sensitivity to housing. And for Ontario, that effect will be larger because there is more exposure to housing in Ontario than there is across the rest of Canada. So there will be a drop in GDP over the next few quarters, but we don't think that it will be as severe as some of the recessions we've experienced in the past because of things like the effects of the stimulative effects of strong population growth, the fact that we're starting this period of slower economic growth with a very tight job market. So it means that open positions will be eliminated in many cases rather than jobs being eliminated. But we do think that inevitably over the next few quarters, the effects of sharply higher interest rates will weigh down the Canadian economy, and with a particularly strong effect in Ontario.
Usually when you're in a recession, government tries to get you out of that recession by spending. Given that we've had the dramatic spending increases with the pandemic, do we have the fiscal capacity to help people in a recession and or help us get out of a recession?
Well, we've actually put out a few pieces on this in the last few months. We certainly don't think that now is the time to increase spending, given that we haven't seen a slowdown in economic growth that's consistent with really what we would need to offer stimulus. There's now more monetary room so more room to reduce interest rates in the event that we get into a slower growth environment. And we think that the Bank of Canada will do that going into next year as it becomes less necessary to have rates in restrictive territory. But, there will be some room to offer stimulus, but we do think that it would be wise, particularly at this juncture, for governments to be cautious about offering new spending, particularly when we haven't reined in inflation just yet, and there's a risk of re-stimulating it.
Let me ask you about interest rates. I understand that last week, long bonds, the yield on long bonds went up, and some people are thinking this is an indication the market thinks that interest rates aren't going to come down as quickly as we used to think interest rates are going to come down. What's your assessment of what happened with long bonds and the implication on interest rates?
Well, we have long thought that what would happen in Canada in particular was that interest rates would come up. That would help to engineer a slowdown in the economy and ultimately to rein in inflation. And then after that point, we'd start to see cuts as it became less necessary to keep interest rates in restrictive territory. So that's still our view. That's still what we think is going to happen in Canada. In the US, there's a little bit more inflation, so there may be a need to hold rates a little bit higher for longer. There's less sensitivity to housing. But what's been happening with the bond market is that, there has long been a belief that interest rates would come up very quickly and then come down just as quickly. And many investors are now starting to buy into the idea that we could be in a higher for longer kind of environment. Again, we think in Canada that rates will come down, but we're not expecting to go down to the rock bottom rates that we saw during the pandemic or after the global financial crisis. So it's kind of a combination of different factors. There's sort of the fundamentals of the economy, which we think will eventually result in interest rates coming down. But at this point, there is a belief among market participants, or a fear, I guess I should say, that we may be in a higher interest rate environment for longer than they at least previously expected.
Mark, if you were in your 30s and hoping to buy a home somewhere in the Greater Toronto Area in the next couple of years, are you optimistic or pessimistic?
I guess I would go back to some of the studies that we've done that talk about where affordability is. And we know that it's very stretched. We know that it will take a lot to get us back down to where we were even in the early 2010s in terms of house prices relative to disposable income. So I think the backdrop is challenging. There's no question about that. There are still opportunities for people to find places to live, be that in the city or a little bit further afield if you find the right place that works for where you want to live. But certainly the backdrop with respect to housing affordability is challenging, and when we look at where young people are ultimately choosing to live, it's clear that that's impacting where they choose to live.
Marc, you've been really, really helpful in explaining the situation. I really appreciate it. Do you have a Twitter account, or does Desjardins have a website or something that people should go to if they want to sign up for your newsletters or your intelligent pieces?
Certainly feel free to sign up for our work on our website. We publish a lot on the housing market and various other economic issues, and you can follow me as well.
Excellent. Thank you very much. We're going to take a break and come back, and I'm going to give you my recipe on how to solve this housing crisis. Back in 2 minutes, everybody.
Thanks.